What's up, guys? Welcome back. Welcome back. So real quick, we're going to go through this past week of price action. I'm going to show you how I traded it or how I think about it when I trade. But first, let's get this out of the way here. This is a bar. Let's make it a red bar. Let's say loss. Let's make it a red bar. And then let's do another one here. Let's make this one a green bar. I'm going to do this to emphasize something. So, if you see a big bar like this going down, okay, what happened during this bar? Well, there was a lot of aggressive selling during this bar, and this is really a give-up bar because it's following a trend, right? So it's a reversal bar. It's reversing all the trend. But where are all the bulls? Where are the bulls that bought all the way up, created all these tails every time it tried to reverse? Where did they go? Well, they gave up, okay? They gave up because they were sure it would reach near the breakout point, and it did. So what you had here, though, you had bulls or bears selling at the top of bars, hoping to get a reversal. And they're always doing this. All right. So the bear that sells at the top of the bar, what is he? Well, he's a limit bear. All right. Because he places his order above the current price. He waits for the market to come to it. And then he activates his order and it comes down, right? And he can be a limit bear above a bear bar or a bull bar, okay? We're just saying this is the top of the bar. He's a limit bear. Probably be better if we put it over here. Probably make more sense. Let's see. Put it all over here. All right, limit bear. He's selling at the top of bars, okay? What is a limit? Hold on. No, I had it over there because it's a bear. It's a limit bear. Sorry, guys. Confusing myself. All right, so limit bear here. All right. So if the limit bear, if every time, say a bar races up and it closes at its high, the limit bear is there to stop the movement. Remember, limit orders can stop a price movement, but they can't make the price move, okay? So if you're buying into this, these limit orders can absorb your buying, but they're not going to take initiative and go down to sell. So the limit bear is making money here. And what you'll see, guys, is limit bears are always the first bear to make money. Okay? Why is that? Because the next bear we're going to talk about, which is the stop bear, we're going to shrink that a little bit, and then we're going to copy it. Okay? This opened and then immediately sold down. So would you consider this the same bear that sold this? No, I wouldn't consider that because this bear got the best price. He took the most risk and he got the best price. This bear here is getting a good price, but he's also betting on the trend continuing. So he sells here. He sells as soon as this bar closes, hoping we're going to get another bar down. And he is a stop bear. He's a stop bear. All right, now why is he a stop bear? Because he probably put a stop below this bar. When price traded below, he got triggered, okay? And then you have the opposite over here, okay? You have limit bulls. If this is the first time you're hearing about these terms, guys, I got plenty of videos on it on my channel. Go check them out. Limit bulls, they're waiting for the price to fall, okay? And then you've got stop bulls right here. And as soon as the price falls, or as soon as this bar closes, they set an order to go long, and they are long above this, and these are stop bulls that created this move. All right, as soon as the bar closed, they hit buy the market, or they had stops, and since market orders turn into stops when they're hit, stops turn into market orders when they're hit. It doesn't matter if it's just stops above here waiting to pay a higher price, or if there are people hitting buy the market as soon as this closes, okay? So keep this dynamic in mind. What you'll notice is that if a limit bull is making money, he's selling above a bar. Who is he knocking out of the game? Well, he's knocking out the stop bull. Okay, these two are correlated. All right? Because in order for the limit bear to make money, when he buys at the top, or he sells at the top of a bar, he's expecting the price to go down. When this stop bull buys at the top of a bar, he's expecting the price to go up. So if the price goes down on the next bar, the limit bull clearly won the day, and stop bulls did not. Limit bear won the day. Stop bulls did not. The same is true for limit bulls. Limit bulls wait for the price to retrace, okay, and then they buy somewhere in the lower part of the candle or below the candle, okay? And if they're buying here, hoping for a retracement, and stop bears are buying here, hoping for a continuation, all right, these two are correlated also, because one of them can't be making money if the other one is. All right, so make sure you understand this. Pause it, understand it. The stop bear goes against the limit bull. The limit bear goes against the stop bull. All right, that's how the orders are taken in. And if you understand that, you can pretty much look at any chart and see what's happening and structure a plan to trade it. All right, so we're going to get rid of this here. Get rid of that. Go back and watch that if you're still confused, or if after I explain it to you. So we're going to take from 10 o'clock the first day. Okay, we're going to try to see what kind of day that we're having, okay? You can kind of get an idea before then, but we're just going to take 2 hours of trading. You know, let's do 9 o'clock. Let's do 9 o'clock. Let's do the first 30 minutes of trading. Important thing you have to always consider before anything is context, okay? Context is the bars to the left. All right, context is what has come before this current price. All right, think about it this way. Say someone's having a conversation with you and you've never met them before and they seem pretty nice and they're saying nice things and you're laughing, but then you look down and they're clutching a knife, a big ass butcher knife or a razor blade in their hand, and they're just kind of flicking, playing with it. Would you feel comfortable talking to this person after that? You would not, because now the context has changed. Now you're talking to a nice person that's potentially fucking crazy, right? Now you're talking to someone that potentially wants to hurt you. So the context is different. It's the same way in the market, guys. When you see bars on a chart, you have to know how do they relate to the bars to the left. Because the bars to the left is what the market participants have been doing. All right? And the bars to the right tend to look like the bars to the left until you have some type of event that changes it, a breakout or a spike or something like that. So we want to be looking at the bars to the left. So if we start on this Monday here, the bars to the left have been in a channel. Okay, they've been in a channel. All right. And you see the price action overnight wasn't too significant because there was barely a gap. But we gapped up in this channel here. This is an upward sloping channel, so you would expect it to break down a high percentage of the time. We have hindsight here, knowing that it didn't break down, it broke up, and we'll talk more about that later. You also had a wedge pushing down here, but we're not going to focus on all that you see now. We're going to focus on what happened after 10 o'clock. So what happened? It gapped up, closed the gap, okay? Closed the gap, got to the bottom of the channel, got to this low here, could have tested this low, and never got close to this low. All right, they looks like they bought like between a 40% retracement of this zone right here. Ooh, excuse me. So gapped up, burnt down, and then what happened? So who's making money right here? The easiest way to answer that is to look what would happen if you bought. If I bought as a stop bear here, or stop bull here, hoping this to continue, did I make money? No, never even traded above. Traded above looked like to trap. Looks like there was a wick above, but that's it. And then traded right down. Okay, so that didn't work, so I buy a little bit lower as a limit bear to make money. Does it work here? No, never came back up. Does it work here? No, went back down. But it starts to go into a trading range. So now I know that stop bulls are not making money, and neither are limit bulls making money. Okay, so I'm free to short this. Okay, I'm free to short this in any way I want. I'm free to sell above bars. I'm free to sell below bars because bulls are just not making money until we get to the trend line here. And I know it's a trend line because I've checked the context of the market. I've checked this. I've drawn this trend line. I only needed these two, this one and this one, to draw it and just extend it. But I have all of these touches. 1, 2, 3, 4, 5, 6, 7 touches. We have an 8th touch here. Okay. Touches the trend line. And then what do I see? Well, I see that the limit bears who bought the low of this candle, because that's what they did, the limit bulls, they bought the low of this candle, they bought it up and they made a profit. Okay, it went up 24 points. Came below here, they bought it up again, they made a profit. Okay, See that? They made a profit. And now I'm seeing that the stop bulls have made money. So this gap right here, okay, tells me that stop bulls are making money, or market order bulls are making money, because they waited till this candle closed and it just retraced a little bit and they bought it up. All right. So now at this phase here, I want to be a stop bull or a limit bull. All right. Stop bulls making money. If stop bulls are making money, that means that limit bears are not making money. So what does that mean? That means every time this candle closes at its high, limit bulls try to short, they get a small wick, and then they get taken out. Okay? A limit order approach to this market would be every time there's a bull bar or a bear bar, and they want to buy this, we expect the stop bears to come in and sell this off. But what happened? The limit bulls were there to push it back up off the low. So they couldn't get anywhere with that, right? So now what am I looking for? Well, if I'm trading this with all this in mind, I'm looking for any red bar that closes near its low or in the bottom 25-30% of its candle range, and I want to buy it. I can also buy on stops, but I got to be willing to scale in. Okay? So another component of this is what's happening above the highs and lows, because understand this, guys, limit bulls buy at lows, limit bears sell at highs. Okay, they do that on individual candles, but they also do that on the overall candles, because these are all individual candles on a higher time frame. I can combine these, all of these right here, and make a hour and 5 minute candle. I don't know who's watching an hour and 5 minute candle, but trust me, I'm sure there's some traders that are. But if you notice that every time you come above a high, you get sold off. Went above a high, sold off. Even this one here went above a high, sold off. This one here went above this high, sold off. Okay. This one here went above this high, sold off. This one here went above this high, sold off. Okay, so you have this sell-off going on above highs. So we want to get to the end of this channel, but how do we enter the trend? Well, if stop bears are making money because you have this gap here, and limit bears are making money because they've made money here by buying this and then here by buying this, you can enter at any time. Just enter the market and put your stop below here. Okay? So I enter here. Let's say I wait another bar. This is confirmation for me. I enter here. Boom, I made money. This is pulling back. Okay, pulling back. It looks like about 50% of the candle. You could have entered here or here. Okay? This one here didn't even pull back. Bam, you enter. But now this is interesting because now we're getting a bear bar. What do we have? We have a limit bear waited up here until price got near the top of this channel, and then they started to short. Okay? But since limit bears are making money along with stop bears, I can buy any bear close thinking that the breakout's going to fail. So I buy here, and then I can buy there. And then I can buy there, and then I can buy here, and then I can buy there. I can buy here, I can buy there, I can buy there, I can buy there. See how it traded below this? I can buy here, I can buy there, I can buy there. Now this is the top of a trading range, okay? Top of a channel, so you probably would have stopped buying. But let's say that you were caught in this. Let's say that you were buying, and you were caught in this. Well, if limit bulls were making money before buying small pullbacks, because this was a small pullback channel inside of a larger channel here, okay, they were making money before buying this. This big bar here where everyone gave up, they're probably going to make money buying this. Okay? And you see they did. It traded below here. They bought it up. This candle started here, traded to the low of this, and bought it up again. All right? So now that this happened, you might be a little squeamish, but you see now that limit bulls are coming back. What happened again? Limit bull bought the low of this. Limit bull bought this low. Then stop bulls started making money again. They made money here and here. Okay, so you could have bought that. You could have bought that. First bear bar here, you buy this. Do you make money buying this? No, you don't make money buying this. What about this one here? Make money buying that? Went up a little bit. You make money buying this? No. Okay, so now limit bulls can't make money. If limit bulls can't make money and they're the weaker of the bulls, that means that stop bears are making money. So you just wait to see the first stop bear make money, and then that means a limit bear has made money before him. Okay, so limit bears are selling these highs, boom, 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 boom. Okay, not getting the reversals they want. They get the first one, it's bought up. They get the second one down right here, it's bought up briefly. Can't come back up to the top though, and then limit bears fill this out, or limit bears fill this out. Okay, so now the problem becomes, okay, now we know we're in a triangle, right? We know we're in a triangle here, so you could probably make money buying and selling, but you still want to figure out who's more dominant. And for me, it's the limit bears, the limit bulls for me. Okay, I'm buying this low. Okay, any bear bar, I'm buying the low, buying the low, buying the low, because I'm expecting this to reverse every time it comes down here. I'm buying this low. This comes about below a bar. I'm buying that low. I'm buying this low. I'm buying all these lows, or at least one of these lows. I'm buying this low, and I'm buying this low. Now, since it's a trading range, we're going to buy low, sell high, and scalp. We are not looking for a lot of points in this, but it's a lot of pretty reliable trades, okay? So just keep that in mind going into the second day. So we gap up the second day. This was clearly an overnight move that happened. But so you wake up, and the context is a gap. So you already have some bias for the day. You already have strength in this gap. You should see this gap as a huge green trend bar, okay? And then this is follow through. So we follow through on the gap, all right? We come down here, we push below this candle, almost below this candle, and what happens? Limit bears buy this up, okay? Or limit bulls buy this up. They buy the low of this candle, okay? It happens again here, but not until a stop bull has made money. So at this point, really, at this 9 o'clock point, you can say that we're bullish and that the move is real and it has follow through, because you've seen the limit bears protect the downside, limit bulls protect the downside, and you've seen it happen here, and you've seen stop bulls make money. So what am I doing then? I'm going after the stop bear participant, and the stop bear can only make money after there has been a red candle down, okay, and then they want to sell to get the next candle down. All right, so I'm going after them because I don't see them getting a lot of other candles in the other direction. I don't see them being able to get a lot of candles down because limit bulls are protecting the downside. So what happens? Well, if every time I know this bear needs another bar to be always in long, what do? I buy this. Look how it retraces here. Okay, I buy this. I buy this low, or I buy right here. Okay, it goes up. Another party here tries to sell. I buy it. 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 I'm buying all of these because the next bar, if it's successful, makes a stop bull money or stop bear money, and I don't want that. I don't want the stop bears to make money. So I'm attacking the stop bears. Okay? Every time I see them try to make money, I'm there to say, we're not going to do that. So I'm buying this, I'm buying that, I'm buying this, I'm buying this. Okay, but now you can see they're starting to make a little money here. Okay, this retraced to the top, limit bears got involved, sold it back down. Even if I buy this one, though, I make money. Okay, even if I buy this one, which I would buy because it's at the bottom of a flag here, you make money. Same thing here. You buy this. You could have bought this as it retraced part of that. You could have bought this, 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 these, this. Even at the very end of the rally, you could have bought this. So all day long, from right here, from this area right here, all day long, you had a strategy of how to make money, and you did it being a limit bear or limit bull. You were patient for it to come back down. You had some areas where stop bulls made money, so legitimately you could have entered all day and just used the appropriate stop. If you buy anywhere in here, guys, where's your stop at? You buy anywhere in these prices, where's your stop? Your stop is below this wick right here. Okay? Once you get out of these prices, I mean, you buying anywhere in here, anywhere in here. Okay? Once you get past these prices, you might be able to move your stop here. Okay, that looks like it was resistance there or support. And then you could probably move it up to here, to here. This took you out of that, and then this took you out of the rest, but at the end of the day. Okay, but from this little bit of price action here, you had a framework that it was going to be a bull trend day. So you should already be buying. You shouldn't be fighting the trend, which is half the battle, knowing what direction to go. The other half is knowing what type of order to put in. All right, let's look at this one here. This bar started here. Okay, looks like it didn't change much from the overnight session, but it was bought up and then it was sold down. So who's active up here? Immediately you know that it is limit bears. Okay, same pattern as before, above a high, and they're selling it. It went above this high and it sold down. Okay, this one went above this high and it sold down, but we don't know that yet, but we can keep that in the back of our mind. So now this is selling off. Selling off, selling off. How is it selling off though? Is it doing it quickly? Or is there a lot of limit back and forth? Is there a lot of, how tight is this channel? Okay, this channel's pretty tight. So you know there's a lot of back and forth. And since this is upward, downward sloping, you're expecting it to break up, right? So you have limit bears making money here. They sold here. They sold here. They sold here. Came back up. They sold here. This came back up to the breakout point. They sold it down here. This came up. They sold it down here. This didn't come up, but the stop bear made money here. You had two candles on a retracement. They sold it down here. Okay, so as of right now, though, it's looking like the bears are in control, and only the limit bulls are making money. Okay, so the limit bull side, the bears are making money on both sides, but only the limit bulls are making money. How they're doing it? Well, they're buying this low. This went up for a scalp. They bought this low. This went up. They bought this low. This went up. You buy this low. This went up. If you notice, every low that it comes down under, it pulls back above. Okay, but then something changes in the market here when you get ready to break out. Okay, and you can see this in real time. You can see it without hindsight or whatever people accuse you of. You can see this in real time. How do you know? Well, it's when the stop bulls start making money. Because if stop bulls are making money, limit bears are not, right? So this pulled up, this was bought up to here, limit bears slammed it back down. They stopped the movement, reversed it. Same thing here, slammed it back down. Same thing here, slammed it back down. Once this gets above here, in my opinion, you either put an order down here to be a limit bull, or you just buy at this area and put your stop down here. Okay? Because you're expecting an upside breakout, right? You're expecting an upside breakout because you're in a downward sloping channel. You've already seen previous signs of buying pressure. It wasn't like this is the first green bar, series of green bars you've seen. If you've noticed, you had a trading range bar here. Okay? They sold it down. Then you had a trading range bar here. It's a doji. It's a reversal bar. On some time frame, a bar went up and a bar went down and made this bar. Still green though. Then they took out its low. Same thing here. Trading range bar broke above the trading range. Failed. Came down. Failed here. Same thing here. But now look, you have two consecutive bars. So you've already seen them be able to put two consecutive bars up. Then they're able to do it again, and then they give you three. There's no reason why you shouldn't be in here. Okay? You have more than one reason, more than two reasons, more than three reasons to buy this. So let's say you buy this. And let's say you want to buy on stops because you think that limit bears are not making or are not able to keep this down. Limit bears have been running this trend down because every time it came up to the high of the previous bar, they sold it. So what do you want to do? Well, you want to buy the tops of all the bars. Boom, 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 all the way up until what happens? Until stop bulls start to make money. They made money here. Okay? They made money here. So now you have the same situation that you had here. Something is changing. This is 4 bars, but you could probably do it with 3. Something is changing. They're making money. Okay? So what do you want to do when they're making money? What do you want to do? You want to switch how you trade. Okay? It's no longer profitable for you to buy the tops of bars because there is no tops of bars that you can buy. You can be a limit bear and buy, or limit bull and buy the bottom of the last bars. You could do that, but that's not even working either. So it would be, for me, every time a stop bull tried to make money, I would be wanting to sell on limits. Okay, we know the stop bull can't make money before the limit bull does, so the limit bull bought the low of this candle, then the stop bull bought the high of it and made money. I'm shorting here now because I think that this trend is enough to get a second leg down. So I have this one here, shorting this. Okay, and then we go into a trading range, just a bunch of chop right here. You can still get a lot of information from this, but you got to really watch and know what you're looking for. What I'm seeing here is that there's a lot of wicks to the downside. So limit bulls are active and limit bears are active. So limit bears are selling the wicks to the top, making it go down. Limit bulls are buying the wicks to the bottom, making it go up. And what do you get? You get a trading range, right? We break out of the trading range, break above here. All right, I want to be a seller there. First, I want to sell here, then I want to sell here, and then I want to sell here. And then we get this big move down to the bottom of the range. Well, most breakouts fail in the bottom of the range, bottom of a trading range. So I'm automatically taking profits down here. I'm not looking, keep in mind, guys, I'm not looking for this all the way down because the context is trading range. We're back to context. The context is trading range. So if the breakout fails on the trading range, or I'm sorry, when we come down here and it looks like it's strong, this is really strong, but then it fails, well, duh, it's a trading range. Okay? It's a trading range. So I'm out of these longs, I'm out of these shorts here at the bottom of this range somewhere, and it gave me ample time. It was down here for a while. And then what's happening down here at the bottom of the range? Well, limit bulls are active again. Limit bull, he bought this up, not great follow through, came back down, took out the low, but then the limit bull tried it again. He tried to buy right here again. Okay, this retraced 50%, he bought. This retraced 50%, he bought. This retraced almost looks like 80%, he bought. This retraced the low of this bar, he bought into the close. All right. Let's go to the next day. Looks like we gapped up. So once again, we have a bias. Okay, we have a huge gap bar. So we're already thinking long. We're thinking long. Okay, but how do we go long? Do we go long on stops or limits? Well, at this point, after a huge gap bar and some follow through, and this is really all the follow through you would have needed for this day, when you saw this come up, you know, there's a big green bar below. It came up, gave you a trading range day. Not great follow through, but then the follow through came. You traded above this bar. Then the limit bears got involved, pushed it below this bar, but then the bulls came and bought it back up. So think about if you're a bear that sold here, okay, and you thought you were going to make money, but before it could even close at the end of the bar, it reversed up on you. You're probably not going to be too happy about selling that. So I want to attack now the stop bears as they try to make money on follow through. All right, and how do I attack stop bears? Well, I have to be a limit bull. All right, so any red candle, I want to buy below. I'm buying that. I'm buying that. Okay, I'm buying this even because it was low enough to challenge the low of this low. I'm buying that. I'm buying that. I'm buying that. I'm buying this here. Okay, I'm buying this here. Okay, so all the way up I'm buying, and if you see stop bulls start to make money, I'm buying this one here. I'm buying this one here. Every time a stop bear tries to make money, I'm buying it. Okay, I'm buying this one here. I'm buying this one, this one, this one, this one. Okay, if I don't buy all of these because I'm worried about my risk, I'm definitely buying this one here because it took out a low. Okay, I'm buying that. I'm continuing. I'm buying that one. I'm buying that one. Okay, continued all day long. And to the close till we went into another trading range. So once again, from this price action here, you have your plan. I'm going to buy the lows of bars. Okay, I'm going to buy the lows of bars or close to the lows or the lowest, you know, the low 30%, low 20%, whatever criteria you set. If they're deep pullbacks, if they're coming below bars, I would try to buy at the low of the candle. If they're coming like here, this came here, you had a couple of them that came about halfway, then I might have to raise a little bit. Or I might just go long because they're pretty much stop orders if they're not buying too low. Like this, I call this a stop entry here. It only retraced about 20%. Go to the next day now. We're on the next day. Next day opens up, it gaps down. Okay, but what's the context? Well, the context is we just came from a spike and channel, so we're probably in a trading range. All right, so I'm looking for a trading range price action. I'm looking for bulls and bears to be active at highs and lows, so I need to mark out my highs and lows. That's a high, and what's a credible low? Probably right here, that's a credible low. I'd call that credible. This came down here and then led to another push up here. I'd call that a credible low. So I've got trading range price action now. So I know I can buy and sell and make money, but now it's context. I don't want to be buying, I don't want to be selling down here, I don't want to be buying up here unless something has changed. So what do I see here? I see a lot of wicks. I see a lot of trading range bars inside of a trading range, which is what you're going to see. Anytime you see wicks, big wicks on bars, trading range. Okay? It opened here, went all the way down, came all the way up. Opened here, went all the way down, came all the way up. Went here, went all the way up, came all the way down. Went here, all the way down, all the way. This is a trading range. This is a trading range to start the day. Typically, when you have a trading range to start the day, inside of a trading range, you're going to have a trading range day. Typically, that's how it's going to work. Okay, we see it didn't turn out like that. Okay, but let's see how we can use this price action here to get some trades off and figure out what the market's trying to do. So who's making money in this area? Well, they both did. Only difference is bears made it above bars, bulls made it below bars. All right. So if I'm going to sell, which I don't want to do at the bottom of this range now, I would do it above bars. Okay. So let's look at every sell above bars. Let's do something a little different. Let's look at every sell above a green bar, because if limit bears are making money, that means that stop bulls are having a hard time making money. And they did in this trading range. But we broke out of this trading range. Stop bulls or limit bulls stopped making money. You see they tried to sell the high of this, didn't work. Tried to sell the high of this. It traded down long enough. Maybe they scalped, but really didn't work. And then you had a situation here where this close is identical to this open, and it shot up. So you got limit bulls or stop bulls making money on this one. Okay. So, but what happens here? So let's say we take all this into consideration and we start selling the highs of bars. Okay. Say we sell this high and they made money. Mistake. We sell this high. They came back. They made money. Mistake. Probably wouldn't sell this high. But once you started to see them putting long wicks above bars, now I can sell the highs again. Right? So this long wick came back, and then this wick here tested the high. I'm selling that. This tested the high. I'm selling that. This midway breakout point, selling that. This here, selling that. All the way down. Okay? But now you're at the low of the range again. And the limit bulls start to take over. All right? How do you know that you can't sell highs anymore? Well, it's when you sell a couple and they don't work. This one does not work. I mean, you might have made a scalp, but it doesn't go down past this bar. This one does not work. This one does not work. Okay, stop doing it. Who's making money now? Limit bears are making money. And because limit bulls are making money because they're buying these lows and they're being bought up enough to make a profit. The other ones are not. You also have a wedge here, though. It's like a triangle wedge, however you want to look at it. You got 3 pushes up. 1, 2, 3 pushes up. So you could have seen this also. Breaks out of the wedge. But then what happens? Stop bulls start to make money. Okay? But it's still mainly a limit market. So if it's a limit order market, what do I want to do? Well, I want to buy below. I want to buy below bull bars, and I want to buy below bear bars because I'm expecting the breakout to fail. Because limit bears have shown me through all of these wicks all day that they will contest price with me. All right? Only problem is, though, we're at the top of this trading range. We're coming to the top of this range. So if I do get into the spirit, I got to buy below here. I got to buy below here. I got to buy below here, buy below here. And then if I buy below here, I definitely made money here. but then I buy below this bar, I buy below this bar, but now I'm at the top of the range, so I'm a little weary, right? Comes up to the top of the range and then turns into a trading range for the rest of the day. Okay, turns into a trading range the rest of the day. Limit bears. When's the first time they stop making money here? Well, if I buy this low, I made money. If I buy this low, I made money. If I buy this low, I don't make money right away. I have to wait a bar. All right, so now this is even signaling to me, okay, don't buy the first bar, wait till the second bar, because now they're able to put two bars together. Same thing here. With that knowledge, what happens? I wait till this bar, I buy this bar, and I get a rally on this one. I wait till this bar, I buy this bar, I get a rally here. I don't get a second one here, but there's a rally there. There's two bars here, I buy that, there's a rally there. And then there's three bars, 1, 2, 3 bars. You buy this, you don't make any money. You buy that, you barely make any money. Maybe you get out at break even. And then you see 3 consecutive bars here. Only problem is now you're below a swing low and you have support coming in. But at the end of the day, I probably wouldn't even bother myself with all this anyway. I probably wouldn't have even been bothered by that. All right, so we just went through the entire week of price action. Okay, and I think I've given you guys enough to where you can go back and test this and see that these questions work. Look at how people are making money.